All right, stock market analysis and projections. First, this important information. This tells you about our analysis and how we approach analysis and how important it is for you to use your own trade ownership as you apply our analysis or any analysis that you get from anywhere. So trade ownership, a very key aspect to success in trading. You must own it because if you don't own it, you're not going to manage the risk. And that's really what's so important to success. Your own trade with somebody else's information. If that information is quality, then you can apply what seems to fit for you for your own membership. But then if it's not working, you need to take it off. And that has to be your decision. All right, market brief for this week. Well, the stock market surge runs unabated as the investors keep buying, not allowing any dips, as we have seen. CPI and PPI show muted inflation as the effects from the tariffs is yet to be seen. That doesn't mean we won't get some upside ticks in inflation, but it may not be as big as what a lot of people had feared. The biggest market move of the week came in the report that President Trump was about to fire Fed Chair Powell. And then the market moved on very sharply, and the news came out that, well, he had denied that. And the video of him denying it was delayed, and the market returned all the way back up before we even got a sense what he had said. So a big drop and then a recovery to the plus side on the president's denial about firing Powell. He says he's not going to fire Powell, but believe me, he's going to verbally beat him up between now and the time when he has replaced him. Earnings season started with the banks mostly beating on strong revenues. They haven't done all that well, actually, on the move after the earnings. We saw Netflix come out. I didn't list that here today, and Netflix got hit pretty hard, even though the earnings were on the good side. And that's what happens when the markets anticipate a lot. For the indexes, with the current valuations, there's little room for error because, of course, we're at record level of valuations and the market can stay up for quite a long time while it is at record valuations. It just means that when it tops, and when we get a sense for that, and I'll show you in a little bit what will be some indication of that, then we could see some pretty good volatility. But in the meantime, the markets are strong and powerful. For the week, Russell, S&P 500, both up about 0.5%. The NASDAQ up about 1% as these tech stocks do overperform, and the Dow around unchanged on the week. So that's what happened this week, and the background news just didn't seem to make any real difference. We're going to review the S&P 500, NASDAQ, Russell, and the RSP. I had somebody ask for the monthly S&P 500, so I'll put that up. And I know I haven't really talked about it with the team, but I know at some point we're going to put all of my monthly analysis up on YouTube. So I'll put up I'll show the monthly now, but then we'll show the other markets in the video that we did for members that we'll put up pretty soon. So that's what we're going to look at in here. SPX, NASDAQ, Russell, RSP, and our proprietary indicators. And DJV asked me a question about the market cycles in there and whether or not the short-term cycle had been seen in the S&P 500. And that's really a good question because we've seen almost no dip at all. Let's take a look now at, as we look at the S&P 500. So I'm going to look at SPX. That's set to SPY, actually. And we're going to look at SPX. So we'll start here looking at the weekly. So the, am I freezing? No, looks good. So what we have here are our cycle analysis and the cycle brackets on the bottom. And you can see this very important low that occurred right over here in April. I had originally thought that that low was going to come later out into May, but the market didn't want to because this dip was, the break was so strong and so fast that the rebound was fast also. What that did was it narrowed the cycle brackets by a minimal amount. And then once the market turned up right over here, it proved to us that that bottom was in place, and it has since roared to the upside. S&P 500, a 1,500 point move in just about 4 months. Just an astounding amount of move that we've seen in there. So where are we right now? Well, you can see this rising phase here, and then this potential corrective, minor corrective phase here. We've had no downtick in here. So generally, when there's a corrective phase in the mid-cycle, you could see in here it was very obvious. Here it was very obvious. Here it was not so obvious. It was just a week to the downside or so, but we've had nothing in here yet. And that's why I still believe that there's going to be some modest little pullback in here and then moving to the upside in here. So when I say that, what I'm talking about is a bullish opportunity, is bullishness. This is because I have an arrow pointing down here, that's not bearish. It doesn't say to trade short. It just says that it's illustrating this rhythm that is right in there. And here's that illustration that you can see right here. The market very bullish when you look at that. When I look at the daily chart here on the S&P 500, this is very interesting because you can see these last 4 cycles in there riding the slim ribbon to the upside. All of these cycles in what we call a right-hand translation. If you take the cycle analysis workshop, it's a fantastic investment. You'll learn all about how to use these. So the slim ribbon often gives you support, as you see right in here. If I go back to where the bearish market was, you could see the slim ribbon giving you resistance, as it did right there. Here on the bottom, where the option bias indicator was red, it said keep your option position short. Here, where the option bias is green, it says keep your option positions long. So all of this information is fantastic. Now, when I look at the daily right over here, is this little blip on the Powell sell-off? That's what DJV asked me about, a 17-day low. Is that the low, or is there still another low coming right over here? So I'm showing both examples in here. Now, I do anything I can to fine tune this and to get a good understanding of whether or not that 17-day low was this cycle low or not. You could see there was one here at 16 days, 16, 19, 18, 17. This is an 18-day cycle, average cycle period, as we say. And this time period that's left for a decline is gone. Right. There's really not much left. You could get a pullback for a couple days and then move up again. I don't know which of those is going to be accurate. Will there be one more dip? And sometimes when I don't know and it's not really clear, I put that information in there. And then what I'll do is I will try to find information that helps me with that. So I'm going to move in another chart right over here. And usually I don't show this and I don't keep this up to date for our members. But you can see in here, here is the daily chart that we're looking at right over here. And here is the 2-hour chart that is a reflection of the exact same thing you see on the left. The 2-hour chart has its own cycle rhythms. And when I look at each of these daily cycles, how they formed in here, and you could see the positive cycles, each of them have a half cycle that you can see in there that makes up the 2-hour cycle. So if I look here on the 2-hour cycle, this is telling me that it's a pretty high probability that that 17-day low that you see there on the daily chart right here is the low. Let's just take a look at this cycle, this whole cycle right in here, and this whole cycle right in here. And you can see that this low here aligns with this low here. And it looks like we are in this next rising phase. Sometimes I need to dip down into a shorter time frame to get clarity on that. And DJV, I hope that helps you in seeing that, you know, there's a consistency in the interdays. Now, I had some questions over the weekend that came to me during the week that said to me, can you do cycle analysis on interday charts? My answer to that is only if it's a function of the daily. In this case, this is, you know, essentially the daily cycle. I find that under 2-hour charts, they start to get erratic. 1-hour charts get more difficult. So I don't go as short, anything shorter than 2-hour. But you can see the clarity in here as you look at this. And it does say to me that this looks like the low of this cycle. If that's the case, and I have proof of that, then in the next day or so, I'm going to remove the alternative look in there of the way that looks. I'm going to add in this as the cycle low right over here. And then what I have is an important level. So if you keep rallying and then begin to move down and break that low, that would be a negative occurrence. So I wanted to show you how I break it down into a shorter time frame. Essentially, some people would call that fractals as I do that on this chart. So here is your chart there on the weekly and on the daily. And everything that you see here every single thing that we look at, market cycle patterns, the structures, the phasing in there, our momentum indicators, all of them, everything is bullish still. So any little dip in there, the market has not allowed to occur. And what we have is a swamping condition in here and this little minor move down over here, calling for that being the bottom. Now, this next cycle right over here bottoms on 813. You can see I have this pointing out to that second week of August here on the weekly chart. That's why, because there's no correction in here yet, and there likely will be. So my assumption is that once we get a signal that this is going to move down, then we'll start to look at the potential for how far it could fall and what the timing is of that, which really looks like out into mid-August to get this weekly cycle to come down over there and get ready for the next upside move after that. Everything we look at in here is bullish. Now, how does that project in here? So I'm going to move this out here, and I'm going to look at the positive daily projection. If this continued and remained positive, it would essentially look like this. You can see that. You could come up in here, make these higher levels, and this fib extension is at 64.23. This monthly extension and the bottom of that, the 78.6, is at around 84.80, 84.85. Those are all reasonable upside projections in here were to maintain this bullish look that we have. Again, this looks like it's the cycle low right over here, so I'm going to put that in there, and that low number there is 6201.59 right over there. So I'm just going to duplicate this, and I'm going to say I'm just going to correct that. I do this manual stuff, and I'll just show you what I do. So it's the low is 62. Sorry, that low is 6201.59. Do everything I can to put the most important information here. So without that low breaking there, you really don't have any reason to think that you've got a negative situation. This is the positive translations continuing. And you could get the rally and come down into this time frame, stay positive, and at the same time satisfy what we're looking at here on the weekly, because it would just be a sideways corrective period in there. Now, if something else happened, then it was negative, and let's just look at the negative possibilities. You could see that right there. Well, what would happen would be you'd get a rally in here that would fulfill this upside move. Maybe it gets up to this level at 64.23, comes down, and then breaks this cycle. If that happens, then if it happens early, there's a lot of time for the market yet to fall. Then you could get a rally and still struggle out in there as you're trying to make the base in here on the weekly cycle. So you can get a look in here. This is what it would look like if it was negative. And what would happen was that this would go yellow or go red over here. This would go red here, start to give us downside arrows. And this would break below the slim ribbon. This would start to get the reversal scout turning over first, because that's first. And you would get the negative scenario. This negative scenario right over here, as you see, is lower odds than what is the positive scenario that you see right over here, which is the positive translations and positive momentum and higher odds. That's what we do. We look at the probabilities and we let the market tell us what the conditions are. Right now, the market conditions are extremely positive. Let's take a look at the monthly. I'll just move the monthly in here. And here's your monthly chart. So we had this tariff panic in here. That's way out of place. You see this low right over here aligns with this low here. And then we got this momentum turning back up and moving to the upside. These projections right over here are in that area of the 64, 64.50, 64, 65 and a quarter right there. That's where the monthly projections point up to. And then somewhere out over here, when we start to get more bearish indicators on the weekly and on the daily, we're likely to get into the topping phase for this cycle right over here. That calls for late 2025 to mid 2026 as a corrective period or a bear market. We don't know where the peak is going to be. Right now, you could see I have the fib extensions, the fib supports in here, and how each of the one of them would represent a decline, what the percentage decline would be from the level we're at right now. This is all going to change. If this keeps going up, these are going to be moving up. But right now, we're not concerning ourselves with these downturns here. What we're concerning ourselves with is the upward momentum on the monthly, which is essentially putting a force on the weekly, giving you the upward momentum. It puts a force on the daily, giving you the upward momentum. When that's changing, then we'll first start to see that on the daily chart. We'll first start to see it in the 2 hours, actually, then the daily, then our reversal chart would turn down, and everything would start to give us a very, very good sense for things changing. So I wanted to give you a good sense for how we look at things, why we have been positive here, and how the market has told us that, and what will tell us that things are changing as we look at both scenarios, the positive scenario, which is the highest odds, and the negative scenario, which right now is a lower odds, and maybe a lot lower odds, based on everything that we see here in our sum of the evidence analysis. Let's take a quick look at the NASDAQ, and I'm not going to go through that kind of detail, but you can see in here looking at the NASDAQ, it is very much the same right over there as you look at the NASDAQ. Now, the NASDAQ has been stronger than the other indexes. We don't really see a pullback in here yet, and maybe this needs to be updated to that being the trough right over there. It probably makes sense that that's the case, and I'll just do a next day or two, I will change that because it does look like aligned with the S&P 500. This low right over here is already made, and we're already in this rising phase. When I look at the Russell RUT, you could see here that this is much the same, except for it's very far away from the all-time high. This is a key level, which is, let's say, 2310, which is the dominant 78.6%. We call that the repair level because if it's got strength to get up to the 78.6, it usually has strength to get back to the next high. So that's why we label this a repair level or a warning level. Right now, you can see in here that it's moving sideways for the last 2 weeks. And starting to pull back today, and it's got a little low due just like the rest of the markets, either here or over here, as I said, in the S&P 500, and then it's likely to move up again. Again, you could see momentum strong in every single one of these things that you're looking at here, actually this is just all positive here on the option bias indicator. Look at these upside momentum warnings right in here for momentum. Just phenomenal. If you're not a level 4 member, I encourage you to step up to it because these indicators are just so absolutely great. So that's a look at the Russell. Let's now go back for a second and look at the S&P 500 on the weekly, SPX. And you can see that right there, and what our analysis is. And you can see that how far it is above this high right over here. It's done spectacularly well. And let's look at the RSP, which is the equal weight. And you can see the same cycle rhythms in here just about, and I also put the MIDI in there. That's the mid-cap stocks, which aligns pretty well with that. But look what you have here. While the S&P 500 is well above here, you see the RSP is stalling below this level here as it's been here for about 3 weeks. And this is because there is a lot of concentration in these high caps, widely held stocks that are pushing the indexes up while the rest of the market is starting to struggle. In future speak, I heard Arby make comment on that also, that there was a stalling going on as we looked at the mid-cap stocks. So all of us keeping our eyes on these things, and you can see in here that maybe we were going to make a double top in here and then get out into this correction that we're looking for out into 2026. That's when that begins. So here you could see the RSP here looking at this 2 weeks where it's just kind of been choppy in here and not going anywhere. So the broad market's starting to struggle where the other markets are doing much better. I think I covered absolutely everything I wanted to cover. I think great depth in these markets, and I hope it was a huge learning experience for you.